Melissa, what's your takeaway here, especially given the strong numbers from Apple?
I know that's pretty crazy, but like the gentleman said before, it really is apples and oranges. This quarter, people return to stores. There's also more competition in e-commerce. There's more sites people are shopping at, in addition to going to stores. Walmart, Instacart, Target, they all have a target on Amazon's back, and they're getting better. Another thing too is that the supply chain shortages, of course, everyone knew about. Brands are also taking a lot of cost increases and spending some time negotiating with Amazon, trying to get those cost increases through. And sometimes they stop shipping during that time as they were doing that negotiation. And then the other thing that also happened, Amazon did increase Prime rate from $119 a month to $139 in terms of their membership fee. And we do see the subscription revenue was slightly higher, $8.4 billion last quarter, $8.1 billion this quarter, but that's definitely something to watch.
So, what about the supply chain issues? We're seeing Apple, for example, navigating, ongoing supply issues quite well. What is it that Amazon needs to do? And, if it's apples to oranges, how are Amazon's supply issues different from what a company like Apple is facing?
It's just so different because Amazon relies on merchants, third-party merchants and brands, versus Apple has total control over just what they're selling. So, especially with the lockdown in China, with their zero tolerance of COVID, sellers, there's no manufacturing during that time frame. So sellers are not able to get their goods. Amazon's just reliant on, third-party marketplace and retailers, brands that are reliant on the manufacturing supply chain. So it's really Amazon as a marketplace that is trying to broker all these things, and it's the brands and the third-party sellers that are really having struggles and challenges there.
Meantime, of course, we're seeing wage inflation, rising gas prices. How is this all going to impact consumer spending, which is like the bread and butter of Amazon.com?
Yeah, I agree. And one thing just to correct, the last gentleman did say that Amazon implemented a fuel surcharge that actually goes into effect at the end of April. So in a couple of days from now, actually I think today. So I don't think that impacted too much yet. But I mean, the reality is that prices are going up, costs are going up. So there will be some slowing, but there are some bright spots. One of the things that people are disappointed about with Q2, that also had some, poor guidance than I think the market liked. But Prime Day is always a shining star, and that's actually going to be in Q3 this year. And so I do think that customers are going to be looking for deals, and Amazon has the capacity. They've built out the supply chain. They're going to be having a huge Q3 this year with Prime Day.
Let's talk a little bit about streaming, because Amazon also has a bet here, and it impacts potentially Prime subscription. We saw what happened with Netflix. We just heard Apple CEO Tim Cook telling me they're still very bullish on Apple TV Plus. This is a big area of spending for all of these companies. Should Amazon continue to be pouring money into this, and how does it impact the bottom line?
I'm super positive on Amazon's streaming opportunity. They just bought MGM. That closed last month, so that gives them access to 17,000 TV shows and 4,000 films. They're going to have the most expensive show this fall, which sounds pretty cool, with the Lord of the Rings. And then they're also talking about bringing an NFL game to Black Friday. What's beautiful about Amazon's streaming opportunity is also their ad revenue that they can get from all these shows. This is premium inventory that they can put through their advertising network, $31 billion last year. And so that's a really great opportunity for them. But also, speaking about advertising, that also was a slight miss for them this quarter as well. It missed expectations, but it kind of goes back to, brands can't advertise what they don't have. So supply chain also impacted advertising. So we certainly saw that in our business.